90% of all Bitcoin's price action is explained by global liquidity. So for that to be true, that 2026 is a bear market year, it must be true that global liquidity is going to be falling. Memes went down 99%, more speculative stuff goes down 90%, the kind of newer stuff that's still high quality goes down 65%, Solana goes down 55%, ETH goes down 40%, and Bitcoin is flat. It's that whole thing, and that's what really kind of hurt everybody. Bitcoin today should be at 160,000. So that's the discount we are to fair value according to liquidity. So that was the feature of the year. It was a technical year because of what happened. It should have been a lot stronger finish to the year. But what we do know is we've got a lot of liquidity coming in 2026.
Right now, the crypto market is throwing off mixed signals, and the whole landscape feels strangely off. Bitcoin sits parked around $90,000 while everything else drifts lower, and almost nobody can explain the disconnect. Altcoins dropped 40% to 99% in 2025. Memes evaporated, and even strong projects were sliced in half. This was supposed to be the year momentum took over, yet liquidity thinned out and billions disappeared almost overnight. Something fundamental shifted in October, and the aftershocks are still unfolding across the ecosystem. But here's what sets this moment apart. According to Raoul, 2026 isn't just another checkpoint in the cycle. It's the staging area for what might be the final huge expansion before artificial intelligence and new technologies rewrite the entire operating system of global markets. The government is injecting stimulus, interest rates are falling, and every macro indicator points toward acceleration. Yet Bitcoin is trading roughly $70,000 below where liquidity models say it should be. That kind of gap doesn't remain open forever, and when it eventually reconnects, the adjustment could be startling. The bigger twist is the future beyond that. Raoul cautions that by 2027 or 2028, AI may progress so quickly that the traditional frameworks for investing, business, and markets could lose their meaning. Software costs could near zero, venture capital could fade, and hedge funds might be replaced by self-evolving algorithms. So if everything we consider normal is about to shift, what exactly are we preparing for? Let's hear directly from Raoul for more insights. Please don't forget to like, subscribe, and enable notifications. Thanks for tuning in. Enjoy the rest of the video.
2025, as we all know, was a weird year because everyone was expecting a positive year, started really strong, then faded, and then fell apart later on in the year. And it was a story of liquidity and an extended business cycle, and it was a lot more technical because people just thought that there was this 4-year cycle and it just magically happens, and it doesn't work that way. Economic forces are what drives everything, and the major economic forces, liquidity and the management of global debts. And what we found later than I should have found it was that the debt cycle had been extended by another year, and also the political cycle is really geared towards 2026. So last year, liquidity was being drained somewhat, but then what really happened was that October period when the government shutdown happened. And crypto got hit because of that massive liquidation on October the 10th, and it never recovered. And, if I look at global liquidity versus NASDAQ, it mapped it perfectly. So the everything code worked perfectly for technology stocks, and then crypto, it didn't. So there had to have been something that happened within the crypto market, which was A, the withdrawal of liquidity. It's the furthest out the risk curve, it gets hit by liquidity, but also something structurally broke over that period of time. And we saw that big seller come in every single day. What that was caused by, nobody's ever going to know. Was it Binance who ended up having to backstop their own marketplace because there was no market makers because the APIs are broken and everything else are broken, and then they had to unload inventory? Who knows? I don't think we may never know what happened. But that disconnect, if we'd have followed the map as NASDAQ did perfectly, Bitcoin today should be at 160,000. So that's the discount we are to fair value according to liquidity. So that was the feature of the year. It was a technical year because of what happened. It should have been a lot stronger finish to the year. But what we do know is we've got a lot of liquidity coming in 2026. And also, just to go back to that, is the other thing people struggle with in their heads is, yeah, we can talk about Bitcoin, and Bitcoin was pretty flat, but then anything further out the risk curve gets hit more. And so, memes went down 99%, more speculative stuff goes down 90%, the kind of newer stuff that's still high quality goes down 65%, Solana goes down 55%, ETH goes down 40%, and Bitcoin is flat. It's that whole thing, and that's what really kind of hurt everybody. The dollar looks like it's gradually weakening again. So there's some simple things to look at to see where we are in the cycle. Are rates going up or down? Generally, the bond market's reasonably well behaved, and 2-year rates are going lower. So if you think interest rates are going down and the dollar's relatively weak, that's generally a good sign for the economy. As simple as that. It feels like a recession to people because it is in manufacturing. Mm-hmm. I mean, it has been. I mean, it's real. Yes, it's not in tech because they're having a boom time. They're not only cutting workers, but they're increasing earnings at the same time. So productivity is going through the roof because of AI. That's another management that they're going to have to do, is the AI narrative could run away with them, which is like, we're never going to create jobs because of AI. And then that becomes a real fear. But I think that, you can see them trying to manage it. And don't forget, it's not manufacturing jobs that go because of AI. They'll go because of robots. But they've been going because of robots for years anyway. Look at a Tesla factory, it's mainly robots. Yes, they do employ a lot of people, but not as many as it would have done if it was a car plant 30 years ago. So I think people just need to realize that the government wants to win the election, the midterms, really importantly, to put through the very strong agenda that they've been pushing, and therefore they will do anything for it. And the good thing is that means that us as ordinary people, or ordinary Americans, get bribed. If this is the year that the business cycle picks up, then you want to be long commodities, because that's what happens, and commodity currencies. So that's copper, the basic materials producers like Rio Tinto and those giant companies. They'll kind of do what gold did. They should break out because the business cycle's picking up. So you'll see that as well. If you start to see copper breaking higher, it usually means the economy's strengthening. It's another good indicator people can use for the strength of the economy. So there's that cyclical stuff, which investors can look at. But if it's going to be liquidity driven, then crypto will do best. But technology is in a secular bull market anyway. So it's one of those years where you can pretty much point and shoot anywhere. Why do you get the period afterwards? Normally because interest rates go up afterwards and liquidity gets withdrawn, because what gold is telling you is that there's debasement of currency going on, which we know, but that also the easing of financial conditions has been quite dramatic. So normally the economy then strengthens, commodities go up, and everything follows through, and eventually the central bank has to cut rates, has to hike rates and withdraw liquidity, and that's what causes downside. Doesn't necessarily mean it'll follow through. And the reason being is because we now use the money printer to stop anything becoming bad. Yes, we will get a bear market again. Yes, we won't get a recession because we don't allow collateral prices to fall far enough, because what we do is debase the currency, so optically makes the price of collateral go up. So that's why we've not, outside of the pandemic, which was 1 quarter recession, we've had no recessions. And it's because of this mechanism since 2008, where we've just used the money printer every single time. So I don't think it's the same mechanism again, but it is the same thing, is the economy is broken, and so they keep printing money, so they're debasing the money away from you, but people don't realize that. And that's complicated, because if, let's say, 2027 is a bad year, they hike interest rates because inflation's rising a bit, they withdraw liquidity, market falls, okay, fine. They then come in and add liquidity, just like they did in 2022. What you then get is assets going to the moon again, because people then pretty much know the game. And my thesis has been we end up in a spectacular blow off top in technology and crypto and all of this stuff, because everybody starts to understand what the game is. and that technology is so all powerful right now that it makes no sense to invest in anything that's not basically AI and blockchain.
Raoul Pal says Bitcoin should be trading at $160,000 right now based on global liquidity levels, yet the market is acting like it's half asleep. He argues the price is massively discounted because something in crypto quietly malfunctioned while every other market tracked liquidity perfectly. Nasdaq moved exactly as expected. Crypto didn't. It all points back to October 10th, a bizarre day when the entire system glitched. Market maker AP is stalled, liquidity thinned out, and someone had to scoop up an avalanche of forced sell-offs. Pal suspects big exchanges like Binance may have had to stabilize their own markets, ending up with huge inventories they've been slowly, quietly unwinding. That would explain why altcoins kept drifting back to those October levels in a steady grind. Zoom out, and it gets even stranger. Liquidity drained instead of expanding, the debt cycle stretched, and the government shutdown squeezed conditions further. So, what if the real reason still hasn't surfaced? Let's watch more clips from Raoul Pal's interview to gain more insight.
But I think we have one more cycle before that. And that's going to be the spectacular one. That's the blow-off top cycle. Because right now, people are still cynical. They don't quite believe it all. So, we saw like most of last year, most institutional asset allocators were underweight tech. Oh, it's a bubble cycle. I mean, there's no debt going into this thing, apart from a few companies. It's nothing. But people just don't want to believe that this secular change, this exponential change is happening. But if let's say we have a good year this year, then let's say 2027, liquidity gets withdrawn a bit because we don't need to service any debts really that year. So we have the typical kind of down year. And let's say Nasdaq goes down 25, 30%. And Bitcoin goes down 50, 40, 50, something like that. And we start the money printing cycle again. And Trump is ramping up to try and win the general election. We now know the playbook. And we'll have gone from where we are in AI today to where we are in AI by 2027, which none of us can even predict right now because it's vertical takeoff. Everyone's just going to throw all their money at this. And then we'll have the boom in solar and energy and nuclear and all of the other things around it. I mean, for me, it's got all the elements of a full bubble blow-off to come, but not this cycle because people are too cynical about it still. And I don't want to get too speculative, but
we can.
For me, but for me, somebody ended up buying a lot of stuff that got liquidated, but the market maker APIs were basically closed, so it was difficult for a period of time for them to actually add liquidity. So who bought it all? So in my mind, the issue was really seen on Binance and some of the Asian exchanges. And my guess is somewhere amongst whoever, if your exchanges stop functioning and your market makers can't make prices, at some point you have to do something. So I don't know the structure of Binance and nobody knows it. Do they have their own market makers within? Somebody probably got a lot of inventory, way too much inventory, because they had to. So if you've got a lot of inventory, it's like a program trading desk in equities that I used to work very closely with. They end up with a huge amount of inventory. They need to work it out over time. So what you don't want to do is just dump it immediately. So you just kind of do it every day and try and not impact the market. But that would make sense why all of these altcoins went back down to that level, because a lot of people got carried out. There's no liquidity coming in the system. The entities or entity that bought a lot of this stuff now have to work out of the position. It takes time. And I think that was the feature of the after October. We saw that relentlessly in November and December. I mean, it's almost every day.
Yeah, it's like...
Now, we thought it was a market maker. Yeah, people thought it was Wintermute or whatever. I don't know who. Probably everybody got a lot of inventory. So maybe it was 10 different players with a lot of inventory that needs to unwind it, because all retail investors got liquidated who were in leverage.
But Bitcoin is still stuck within the range of like 80 to 90K.
Yeah, and that's still because liquidity is not flowing. We have to go through the year end. All the banks have to do the window dressing. Now the SLR changes come in from January the 1st, but it's only January the 8th right now, time of recording. So nobody's doing anything yet. So these things take time to work out. So, Bitcoin is just reflecting the fact that there's no actual real liquidity in the market right now. And when it comes in, it'll lift off. And once it gets attention, it can play the catch-up, close those alligator jaws versus global M2, versus global liquidity, versus NASDAQ, versus, historic parallels. I mean, it just dislocated from everything because of what happened, right? So if liquidity gets withdrawn from the system and the government shuts down for the longest period of time in history, you have to change your plan. Now, my plan is I don't trade around stuff, so I don't care. My time is the cycle or multiple cycles. So it doesn't matter to me unless I've got some cash and I can reinvest into the thing. But people's time horizons are all different. That's the other issue, is because people want their money now. It's like money doesn't work that way. Only when you look back do you say, oh my God, I could have made that money in that period of time. Look at 2017. You made 10x in 6 months. Yeah, but at the time, was it obvious until it happened? No. So you just don't know. Nobody knows. Nobody has a crystal ball. But I know that the work on the everything code is as close to a crystal ball as I can get. But it doesn't make it tick for tick perfect, and it won't be. But it'll get it directionally right. 90% of all Bitcoin's price action is explained by global liquidity. So for that to be true, 2026 is a bear market year. It must be true that global liquidity is going to be falling.
Raoul Pal's main thesis for 2026 comes down to one thing. The government needs to win the midterm elections, and they will do whatever it takes to make that happen. That means fiscal stimulus, interest rate cuts, and changes to banking regulations that will flood the system with liquidity. He points to every signal coming from the Trump administration, from Scott Bessent running the Treasury to tax breaks on car purchases and tips. All of it is designed to juice Main Street and drive the ISM Manufacturing Index higher. The mechanics matter more than most people realize. Raoul Pal explains that new regulations will allow banks to buy more treasuries and increase leverage, enabling them to lend more directly to businesses and consumers. This bypasses the Federal Reserve entirely and puts the government in control of monetizing its own debt. The Fed stopped quantitative tightening and started reinvesting, but the real shift is happening in the banking system itself. For investors trying to navigate this, Raoul Pal offers simple indicators to watch. If the dollar is weakening and interest rates are falling, that is generally good for risk assets. Gold tracks financial conditions almost perfectly, while Bitcoin lags it by about 6 months. The gold breakout in late 2024 could point to a major Bitcoin move in 2026. But the biggest warning is about what comes after this cycle. Raoul Pal believes 2026 to 2027 will be the last traditional boom before everything changes. He explains that AI is advancing so rapidly that by 2030, most of the financial infrastructure we have built will no longer make sense. Why would anyone start a company when AI can copy it in seconds? Why would venture capital matter when projects can raise instant capital through tokens? Raoul Pal thinks we might see one more massive blow-off top in 2027 or 2028 when everyone finally understands the game. But after that, the rules change completely. The opportunity right now is clear. Bitcoin is trading $70,000 below fair value, liquidity is about to flood the system, and the government is doing everything possible to create growth in 2026. This might be the last cycle where traditional investing strategies still work, and those who wait too long could miss the move entirely. Now, do you think 2026 will finally be the year Bitcoin catches up, or is the market about to teach everyone another painful lesson? Please leave your thoughts in the comments below. Thanks for watching. Don't forget to like and subscribe.